And joining us now, John Stoltzfus, Oppenheimer Asset Management Chief Investment Strategist, one of the biggest bulls on the street. And you take a look at McDonald's this morning, for example, Starbucks tomorrow, then Wendy's, and of course, a horde of big tech earnings. Where are the weaknesses of this earnings season? Are there places that even you are now shying away from?
Well, we'd have to say that where the weaknesses are, it's pretty pronounced. If you look at the EA page, you've got energy so far. Earnings growth is down negative 14.23%. Real estate negative 14.63%. And materials single digit down, but at negative 6.05. Of course, we're still early in this midway through the earnings season. So we'll have to see what happens. But overall, you've got four sectors last I looked that have double-digit earnings growth, and it's a combination of things like tech, cyclicals, and I think at least one defensive sector, as I recall. So all in all, much like we would expect, this is transitional into a new normal.
And John, it feels like a real make or break week when it comes to the rotation trade, the broadening out trade, whatever you want to call it, because, of course, it's been a while since we've seen big tech report, obviously, and it feels like every quarter a lot of these companies come out and sort of shock the markets with these big numbers, and then suddenly tech is back in charge and leading the market. This time around, are you expecting a similar dynamic?
I think, to see mixed results come in from an area that's been particularly hot is not surprising as we go forward. We've seen it in areas with financials and the process of the recovery. And we've certainly seen it, of course, in technology. Traders tend to throw down anything like a hot potato on disappointment. But the reality is it creates opportunities for people to really dollar cost average, gain exposure, stuff that may have been a little bit too expensive before. This looks to us like a relatively healthy rotation, rebalancing, with likely tech to remain in the leadership, though giving back some of those gains on profit taking by bears, nervous investors, and investors who just want to take a little cash off the table, maybe build a shopping list to look for any babies that get thrown out with the bathwater on day-to-day trading.